Figma lost $49 billion in just 2 months. Yeah, here's the spicy truth about how.
So let's start at the crime scene, a massive $49 billion loss.
That's how much paper wealth just vanished. So how did a darling like Figma crash so hard?
Okay, to get the fall, you have to get the hype. Figma wasn't just a company, it was a movement.
On day one, the stock exploded, gaining 250%. This was a cultural event. But critics immediately called it a huge mispricing. Bankers literally left $3 billion on the table.
And here's the first big crack in the story. It was priced for a perfect future that never showed up.
At its peak, Figma's valuation was just insane. We're talking 77 times its sales, absolutely unheard of.
It was trading at nearly 300 times expected profits. The takeaway? Absolutely zero room for error.
And then, the one thing that couldn't happen for a stock this expensive? Well, it happened. Now, the numbers were still good, but the trend? The trend was a total disaster for this valuation.
This slowdown completely spooked investors, and that's when insiders started cashing out, big time.
See, a series of lockup expirations unlocked huge blocks of shares for employees and VCs to sell. And the thing is, the big VCs were already selling millions worth of shares during the IPO itself.
And on top of all that selling, a much bigger, scarier question loomed: AI.
So what's the verdict here? A perfect storm of hype, valuation, and insider timing. Look, this whole story has some pretty brutal lessons for founders, investors, and yeah, even employees.
So after everything, we're left with one final thought.
The question isn't, why did Figma fall? It's, why did we ever think it wouldn't?